So yeah, I'm plastered right big across the screen as a comment from myself, but it's about risk management and allowing the company and our shareholders to take as many shots at gold as possible with the lowest amount of dilution, and until we're able to unearth, the Holy Grail, and then we have the opportunity to move forward. So our approach at the moment is to manage that risk intelligently, pursuing numerous opportunities with minimal dilution. And what it allows us to do is drive value through diverse ways, be it through royalty, minority stakes, full-time ownership, but ultimately we're driving value. And how is that different to traditional juniors? So project generators versus traditional juniors, I think what we're trying to do is manage risk as well as manage dilution. So whereas traditional juniors would have one or two flagship projects that they are using highly diluted financings in to move along the exploration curve, we have multiple projects. And most speculators, and you see this with project generators, most speculators like to manage their own risk by owning a basket of companies listed on the exchange at various stages. And, the reality of exploration is majority of them, if not all, will fail. Personally, as the CEO of the company and our senior leadership, we discussed this internally, and we felt that we would rather spend our time building a company that is designed to create value. And as you can see in the slide here, I think the most important one being, let me get if you can see my mouse here, I'm not sure, but as you can see over here is we've got how traditional juniors do the financing. Find an early stage project, they do an earn-in option that has a certain amount of cash and shares. They do a financing round, and that's dilution. Based off those results, they go again, they get an uptick in their value, and they go do another financing round. And all the way through that, they get diluted. And ultimately, not only is there technical risk at stake, but there's also a lot of dilution risk at stake. And as the company moves up in its valuation, people have to participate to maintain their stake, or they end up getting diluted out. And if ever a discovery is made, which is very rare, yes, they hold 100% of it, but they've got close to 1 billion shares outstanding, completely diluted, and the value has been sucked out of it at an earlier stage. Where with the project generator model, we do an initial financing round, which we have done, and then all our projects are financed through partner funding, be it through exploration funding, cash, royalties, or shares. And what happens is we end up owning multiple projects, maybe smaller amounts, but capital becomes our partner, and we can have multiple shots and goals. And then because we haven't had to do highly diluted financing, we only have a small amount of shares outstanding. And how that translates into Antler Gold's business model, we got creative, and this is a testament to our team and our leadership. We sat down and we spoke about it, and we thought, what's a creative way to offset risk, increase shots at goal, and wait for the right time for us to swing for the fences when we have the right capital in our pockets and the target looks good enough. So what we've done is we realized our strength was in project generation. Ollie and our team down here, as well as our partners, have got a long-standing reputation in creating good, technically viable projects. And we then move those projects into the early stage of exploration, which allows us to do grass fields and prove the concepts that we are testing. At that point, the value that we've created goes automatically into the markets, and we now start looking for a credible partner to come in and finance moving forward. That is our one option. The other option that we have is, if the target is really good, we can move it along ourselves with our own money because we've been selling other projects. Or the other option that we have, because of our pedigree in the capital markets, is to potentially spin it out and put it in another vehicle with its own management team. So our business model doesn't only allow us to move to an option agreement or partner-funded exploration. We also have the ability to move it along ourselves, or we have the ability to do any other transaction that creates value. So what that has allowed us to do is get short-term revenue, mitigate the risk, as well as maintain long-term revenue through a royalty or similar type holding. And what's the benefit to the investor and the money that the investor puts in? It's definitely the fact that we're efficiently advancing projects. We've got diversified exposure to the commodity cycle. We act in a counter-cyclical way. When a commodity is in vogue, we are looking to sell those projects rather than to acquire, because the cost of acquiring at that stage is high. And then use the money that we get out of those projects to go put together projects that are not in vogue. And all these things are in a cycle manner. So we do act in a counter-cyclical manner. We get upside by having proven technical partners. As you've seen, Antler Gold has already signed 2 quality agreements with 2 proven partners. And it allows us to manage our own risk. Exploration is a risky game, and we're managing our risk as best as possible to maintain our shareholder, our equity dollars and our highly diluted dollars in our bank account.